Am I? Am I audible? Hello, everyone. This is Sejal Agarwal, Associate at 100X.VC. We invite you all to an AMA session organized by 100X.VC. 100X.VC is a VC firm which invests in early stage startups with moonshot ideas. 100X has pioneered the concept of iSafe with investment in more than 161 startups. iSafe is an EU founder-friendly instrument with a future agreement of future equity, in simplified agreement of future equity with deal closures with no legal cost. We have invested in 161 startups over 11 classes. Here with us are the two esteemed partners at 100XPC, Mr. Ninad Karpe and Mr. Shashank Randev. Mr. Ninad Karpe has been an MD and CEO at Aptech for more than 7 years and previously served as managing director at CA Technologies for more than 13 years. He has also authored the book Bond with Baba. Shashank has been previously the founding member and vice president at VCC Edge and comes with 15 plus years of entrepreneurship and investment and has been guiding the startups throughout. Happy to have you, Ninad and Shashank. Over to you.
Hi everyone, good evening. My name is Shashank Randev, and today I have Ninad Karpe, founder and partner at 100X.VC with me, and we'll be addressing a lot of questions around what 100X does, how we invest, what we're doing for Class 12, and a bunch of other things. But before I dive in, I'd like to thank all of you for taking out the time and joining us, and thanks Ninad for taking out the time and being here.
Thank you, Shashank. Welcome, everyone. It's a we're in Mumbai, lovely rainy day today, but I hope we are rained with a lot of questions from all of you. We are all ears and here
So let me
to
begin,
respond to
Ninad,
anything.
by sorry, I missed that.
I said we are all ready to respond to questions.
Yeah, so let me begin by asking you the first question. We started 100X.VC in 2019. Our first check size was 25 lakhs, and then we increased it to 1.25 crores. 160 portfolio companies as we stand today, up till class 11. A lot of companies who've gone through a lot of journeys. What is that one thing in your experience over the last 5 years which has stood out when 100X is investing in companies, identifying companies, and just a little more around the process of us getting into evaluating companies, either at one side of the spectrum, D2C brands, or the other side of the spectrum, deep tech companies?
Shashank, you want all my secrets out this afternoon, evening, but I will tell you. Can you hear me or should I? I hope you
I
can
can,
hear me.
yes.
Yeah. So we get a lot of pitch decks, 8 to 10,000 every year. That's substantial. The good news is that one of us goes through each and every pitch deck you submit. So if you have submitted a pitch deck on the website, presently it's 100x.vc slash class 12, one of us will definitely have a look at it. And we respond, hopefully soon. Sometimes it takes time, but uh, generally we respond very fast. Obviously, we look at moonshot ideas. Obviously, we look at scalable ideas. We look at founders. So we do have criteria which is objective and criteria which is obviously a little bit subjective as well. Based on that, then we form a cohort, which we're trying to form with class 12 just now. And once a cohort is formed, the most amazing part of our process is 100x pioneered Safe Note in India. We localized it and we call it iSafe Note. It's a simple 4-page document, doesn't take 6 months of negotiations, heartburn, lawyers' fees, and all of that. Simple 4-page document, founder friendly, and you can work on it very transparently. So this is, the biggest innovation we've brought to the Indian startup ecosystem. We are happy if more, VCs, angels start using safe notes, and it's on our website. It's open source. So that is a big innovation. It's a light touch model. We don't take board seats. And after that, once a cohort is formed, we bring them all together to give 4 to 6 weeks of masterclass, and then we have what we call a pitch day, where all of them present their ideas for the next round of funding. It is There is no hidden cost, no free equity. We don't take any professional fees. It's a pure play VC firm. We invest in the startup, invest in the founders, and hope each one of them becomes a moonshot. That's how we work.
That's a lot of uh, insight into how 100x is taking a certain company in a particular sector, funding them through an instrument, iSafe, all the way to guiding them and then announcing them at a VC pitch day where they're discovered by other VCs. But before we dive into that, a common question, Ninad, you, Sanjay, Yagnesh, Vatsal, myself, all of us get is, what are the characteristics in an early stage company or a founder we end up looking at when we are evaluating a company?
So there are certain hard facts and then there are certain soft facts. Firstly, we like a startup. Obviously, the founder has to be full time. If it's not full time, it doesn't work. Secondly, the founder ideally should have co-founders. Single founder, it's not that we haven't funded single founder startups, but we prefer more than one. And if there's more than one founder, we prefer founders who have complementary skills, not the same skills. So these are certain hygiene factors, so to say. But beyond that, obviously, we have to look at the passion, the drive of the founder. Is the idea scalable? Can it become a moonshot? At 100x, we invest early, very early. And when we invest early, it's mostly early revenues, pre revenues. At that point, we will not invest unless we are not convinced that this is going to be a huge idea, which is going to become big not only in India but across the world. So it has to blow up to be a big idea. Moonshot idea is the right word.
And while we are evaluating these founders on those parameters, another broader question which we get asked a lot: when is your application deadline? Has it already closed? Is it on rolling basis? You've just closed a certain class, but you've not announced it. How does that entire process work? To answer for the audience.
Sure. Good to get this question. So we are able to clarify. Yes, our class 12 is going on. So if any of you have a great idea, a moonshot idea, just go and apply with your pitch deck. We will see it. One of us will definitely have a look and respond to you. And maybe you'll get funded as well. Uh, so we run these things in cohorts, and we call them classes. Typically, after every 3 4 months, we have a class which is formed. So presently, this is class 12. 161 startups we have funded so far, all early stage, all with iSafe Note, same model, transparent model, where founders have found great value. So the value we bring to startups is in terms of helping them figure out the right business model, the right pricing model, the right go-to-market, all of this to ensure that they're able to rapidly scale. That's the biggest value we bring to any startup.
And Ninad, another point I'd like to make over here is that while our applications are always ongoing, you just need to apply, and one of us will definitely evaluate and get in touch with you. We do have certain closures in terms of dates, and our first close for the application of class 12 is on August 20th. So all the folks who are from the early stage ecosystem are building in any sector, we've got the application link at the bottom of the screen, www.100x.vc/class12. Feel free to kind of apply, share in your information, your decks. We'll be happy to evaluate. Remember, the The date for the closing of the application is August 20th, and ensure that you fill it up much before that, and it only takes 15 to 20 minutes. But yeah, moving on to the next question, Ninad. Another question which is asked a lot. You've got one question on the screen, but before that, a question. The other question which I wanted to ask is, a lot of people ask us, you're the first investor, you're the first institutional investor coming on board for a startup. Do you come in at an idea stage? Do you come in at a product stage? Or do you come in at an early traction stage? And then some people get confused when we end up investing in companies which have been doing regular revenue. Share your perspective on that.
My answer is simple: all of the above. We have invested in 161 startups. If I recollect correctly, four of them have been on PowerPoint. That's not normal. That's unusual. But yes, four of them have been PowerPoint, and one of them is doing exceedingly well. So we do that. It's not that we don't that. So its idea stage is possible, but it has to be an idea which is well developed, which has scope for rapid growth. Pre-revenues, early product. We are early investors. We are the first institutional investors in any startup, and by definition, we are always early. So yes, we invest in all of this. Remember, in an ideal situation, 100% of the equity should be owned by the founders. 100%. I mean, couple 1 or 2% is possible if you have, given it to family or friends, but nothing more than that because the model doesn't work. So you have to have 100% equity. You should be full time. You should have idea which is developed and which are able to pitch, and which we feel convinced that there is a lot of money to be made. So, Shashank, maybe you want to talk about your perspective of challenges and opportunities, and then I will add on to that
Yes,
for startups in the next 5 years. I will add
sure.
on to what you say.
Sure. Yeah, and I think this is a great question. What are the key challenges and opportunities for startups in India in the next 5 years? I think the biggest challenge for the startup community is to believe that we are not at the stage of building. I think with the whole digital infrastructure coming in place, with UPI already being there in terms of the fintech layer, ONDC, and bunch of other initiatives which has been which has acted as a key enabler in terms of India stack, and the advent of so many companies coming out and early stage funds like 100X backing their early stage ideas, as Ninad pointed out. I think that's the opportunity piece, and the challenge would be if you don't start right. Once you started, I think that there are fewer challenges now as they were when we started 100X, Ninad, in 2019. I think those challenges has diminished significantly. I think the opportunities have increased, and today the fatality rate of startups is far lesser. Their ability to capture a market is far higher, and their ability to succeed and build out businesses not only in D2C brands but also in SaaS businesses with Indian pricing models is quite prevalent today as we speak. And I think for the next 5 years, you'll see a lot of interesting models building up, which is core to India and scaling rapidly. Those are my initial thoughts, but Ninad, if you want to add something.
Sure, you have summed it up well, but opportunities, I would say just look out of the window and you will see only opportunity in the Indian market. There's plenty of opportunities. You're passionate about a space, there's opportunity. There's no shortage of opportunity. India is a huge domestic market, unprecedented in the world. If you don't find opportunity here, you'll not find opportunity anywhere. Challenges are there. Being a startup founder is not easy. It's tough. It is tough. It's got a lot of challenges. But if you're successful, it can be a very sweet journey. And of course, you could make some money as well. Sometimes a lot of money. So
So
I
the
think
next
Shashank, maybe question. Yeah, go ahead.
Yeah, so the next question is by Kavita, and she's asking, I'm building a hardware startup and I have a basic prototype, not a product, but a solid idea and a plan. Can I apply? Is there any startups you've invested in that stage? I'd like to take this up and give you a few stats. So 100x has invested in 160 companies. At least 11% of our portfolio companies have come from incubation centers across the country, whether it's Atal Incubation Center or Department of Science and Technology backed incubation centers. And in a hardware company, and we've backed a bunch of these hardware companies. They're all listed on our website, but just to name a few: Jetson Robotics, Wasteful Insights, AccuRobotics, a bunch of these companies who we invested in, succeeded, and are growing at a rapid pace. But in a hardware company, my recommendation is that leverage the incubation network. For instance, we invested in a company called Think Metal or a company called AdSys. And these were all companies which were product. We were the first investors who were backing it, hardware companies, but they had created a prototype. And what helps us in that when we see a prototype is we are able to determine an input and output, right? So while the idea and a plan on a paper might be good and not questioning the capability of the founders, but when you're applying to a fund like 100X.VC, having a prototype either through an incubation channel, which provides you the access to leverage their incubation centers, is a strong recommendation from our side. Nad, over to you if you want to add something.
So we have funded. So Kavita, go ahead. Prepare a great pitch deck and apply. Uh, if you like it, we'll call you and have you pitch to us. All the best.
The next one is from Nirmal. I am Nirmal, an ex Microsoft employee currently building Oculus AGI, the world's first AI project manager agent for enterprises. We are pivoting with a couple of enterprises as design partners and a pre-revenue. Should you invest in pre-revenue companies? Answer is absolutely yes. I think Ninad's already highlighted that. Feel free to submit your information. We've invested in, as Ninad said, idea, uh, pre-revenue, and growth stage companies which have been generating growth revenue. So feel free to apply. We'll be more than happy to evaluate what you're building and get in a conversation with you.
Sure, Nirmal, you seem to have great credentials, which will help in our evaluation process. So go ahead and apply.
Okay, till the time we wait for the next question. Okay, we already have one. We have bootstrapped for 6 months and have proof of concept, and out market is global than India. Are you guys okay with it, or you focus only on India? That's an interesting question, Ninad, and I think we've addressed this bunch of times. I will definitely want your perspective, but let me just begin with, um, we've been investing only in Indian holding companies. That being said, many of our companies have been building global products, and every time we come on board as an investor, really depending on what product you're building, how you can scale from -1 to 0 and 0 to 1. That's where we come in. We advise the company accordingly post our investment. But Ninad works very, very closely on GTM with all our portfolio companies, and he's worked with companies who've been building from India, for India, and from India for the global market. So he'll be able to give you another perspective on this. Over to you, Ninad.
Thanks, Shashank. We are a SEBI registered fund and we can invest only in Indian registered companies. The company has to be registered in India. So there are perspectives. Should a company look at only Indian market? Should it look only overseas market? Should look at India first, then outside India? To look at outside India, then India. There are various ways of looking at it. Our first criteria is it should be registered in India. And if you're doing a global market uh, and we're convinced about it and what you're doing is right, that's what we feel, we'll invest. Absolutely no problem. Please go ahead and apply.
Next question is how to stay aligned with vision during the scale of company in timeline of 5 years. Again, this question is, Ninad will be able to give you a deeper perspective, but what I have learned over the last 5 years is I think 5 years is a long timeline. When 100x comes on board, Our objective is to take you from seed to a Series A journey, and that entails at least two more stages in between. And I think discovering your product market fit is very important. And having a vision where you see from that one or two products uh, becomes very, very important. We've had multiple companies go through this journey. And Ninad, again, will be able to give us a perspective. Maybe, Ninad, what would be interesting is if we can bring up or refer to some company over here, one of our portfolio companies, that would be also interesting.
So, Mahendra, that's a good question. 5 years is not a very long journey in a history of a VC investment. It takes time to build a global company. Example is, Data Sutram. They three founders came from Calcutta, pitched to us, and it was almost on PowerPoint. They wanted to do locational intelligence. They started off, and they've pivoted. In 5 years, pivots do happen. What is relevant today as a vision? See, broadly, the vision stays in that same zone, but how to do it, there could be changes. Vision also can change marginally. If you overall the whole vision, it becomes an issue. But yeah, vision could kind of marginally change. Journey changes, so it's possible the journey changes.
We've got another question. Do you fund similar ideas? To be more specific, if the core of the product is somehow different, but the use cases are the same, would you fund such ideas? Well, I think, there are only so many sectors. And yet there is, as Ninad also pointed out, there's so many opportunities in India. That's point number one. Point number two, we are a discovery fund. We invest in opportunistic companies, high growth companies, very, very sector agnostic. And while we may not invest in a company within the same class or competing in the same space at times, but that has also happened, we have no reason not to invest in a company which has been doing something similar to our portfolio companies. We could have funded X company working in a SaaS space in class one, and we would have gone ahead and invested in the same space, maybe 3, 4 classes down the line. And I think a case in point I can bring out, and Nath can correct me if I'm wrong. We invested in a company called uh, Group.ai, which was in the space of deep tech, deep fakes. And we also ended up investing in a company called SpoofSense, which had a similar use case, but they started working with banks. And like this, we've got a bunch of examples. So that shouldn't hold you back, Mehdi, at all. If anybody or any fund can fund you, it's only going to be 100x, because we are in the business of investing in a large set of companies, and many a times they end up in the same space and sometimes the same market selling area as well. Then are there anything to add over here?
So within the same class, we do not invest in competing companies. That will not make sense. But outside of that, yes, we are happy to look at it.
Okay. So next question. The next question is by Bhanu. What are the key challenges that founders in tier two cities face when seeking investment, and how can they overcome these obstacles? Additionally, what initiatives can 100x.VC take to support and nurture startups from these regions to ensure they have equal opportunities for growth and success? That's a very interesting and a loaded question.
But
Um,
Shashank, you need to respond to it because you travel
yes,
extensively to
yes,
tier two. It's all
yes.
yours.
So, I fundamentally believe that it's a mindset issue. I do not believe that there are challenges for founders building in tier two and tier three cities today. At least 35 to 40% of our portfolio companies, when we funded them, have come from these cities. I think, and having this mindset, I think founders end up believing that they, just because they're not in tier one, they will not be able to build out something. I don't think so. That's correct for a stage at -1 to 0. Yes, you need to be in a market and maybe in a tier one city when you are growing from 0 to 1 or 1 to 10. But when you're starting out, you can start from anywhere, right? And the focus at that time is to only focus on your product and what you're building. As I mentioned, input and output. So that, I think that's what you need to focus on, Bhanu. And in terms of initiatives, I think we do a bunch of initiatives. Um, we have had a founders dating platform which we've been running for single founders, which we've been doing across cities. We have also a Gurukul, um, uh, batches which run, which is essentially our way, a non-for-profit initiative, and our way of giving back to folks who are maybe not ready to apply and want to learn certain skill sets around product development, sales, building for enterprises, stuff like that. And these are pre-recorded sessions and a few live sessions with 100x partners, and that has seen a volume of applications come in, founders learning so that they don't feel as if they are in tier 2 tier 3 they can't build out, and I think that's worked really well. With that, we also have a walk-in sessions which we do, where sometimes if founders feel that they do not have the opportunity to come to Mumbai, we come down to their cities. So we are in Goa day after tomorrow for a walk-in session at Bits Pilani. Again, we'll have a walk-in session in Bombay. We've done one in Chennai, Bangalore, and the last point I'd like to make is that we work with 300 plus incubation centers and community folks, right? And this includes at least 50% of them coming from tier 2 and tier 3 cities. So if you are building in that city, do not hesitate and do not have this mindset that I'm not in tier 1, how do I access it? You are absolutely we guys are absolutely approachable, first, and second, if you have a local incubation center over there, just go out to them, reach out, because rest assured we are connected to them, and if you're part of that ecosystem, we will get access to you, we will come down, chase you, and try out your product and give you feedback.
So let me give you some rest and take the next question. It's an easy question. Can we apply for class 12 without company being registered? Yes, Arish, you can do it. Obviously, if you're selected, you'll have to form a company, and you won't remit the fund unless the company is formed. But you can certainly apply even if the company is not registered.
So I'll request the audience to quickly share more questions because we've got another 10 minutes to go. So the next question is, what are the key challenges that founders in tier 2 cities face when seeking investment, how they can overcome these obstacles? I think we've already addressed this question.
Yeah,
Anything else? Yeah. So I think we can move to the next
may-
question.
maybe you can tell them when class 12 applications are closing, just to
Yeah.
remind them.
So just a reminder again, just a few minutes back, we'd mentioned that our class 12 applications are closing soon, and the date is August 20th. If you are building in any particular sector, feel free to send in your application via the link mentioned below, which is 100X.VC/class 12. So now moving on to the next question, how do you evaluate the credibility of TAM, SAM, SOM figures when the data isn't from official sources? Also, it is important to focus on national level TAM, SAM, SOM from starting itself. A very loaded and interesting question, and I'll be very candid and upfront. Um, I don't know, because what we are seeking over here is that insight from the founders. So if you go to our website, the top 5 things we look at when we're investing, the first is founders' pedigree and complementary skill sets. That's number one. And their ability to kind of pull up their sleeves and build from -1 to 10. And that journey is never going to be in a straight line. I think the second point is market opportunity, which is largely, TAM, SAM, and SOM. And within that, the business model, the moat, and our ability to kind of create more value. In these 5 points, founders are at the number one. And why we give so much emphasis to the founders is that if you've got complementary skills, if you have a business individual and you have a product individual slash CTO, that essentially is a very complementary skills set of founding team, which interests us. And within a specific space, if you're building, uh, it excites us. The TAM, SAM, SOM obviously make a lot of difference. The market definitely has to be big. And I'm assuming that the founders are good. They've identified a blue ocean strategy as opposed to a red ocean, not going after competitor. If you come to us with a TAM and SOM of a Flipkart, essentially that might not entice us. entice us. But if it's a vertical e-commerce play where no other player is there and you have a certain advantage, yes. But even then, the founders would be the first one or the first set of evaluation criteria for us. So the next question is, does the amount of 1.5 CR for 15% get changed also if we want 50 lakhs only for 5%? Well, that doesn't happen. We are very clear in terms of how we invest, and it's a very transparent model. As we started out, we invest only through iSafe. We started with a check size of 25 lakhs in 2019, and we saw our companies grow and reach a certain milestone. So we have gone ahead and increased the check size. It's 1.25 CR, not 1.5, for a future of 15%. And that's the only amount we invest. We do not give 50 lakhs. We do not give 1 CR. We don't even give 1.5. Only 1.25 CR for a future of 15%. And just to bring in a particular stat over here, we've invested in 160 companies. We've deployed 17 billion USD, and these companies have cumulatively gone ahead and raised 82 to 85 billion after our funding. And 70% of this capital has come through growth stage VCs like Sequoia, Chirate, and 30% has come through angels and VCs. So the discoverability of our portfolio companies have been rising a lot, not only to 100x, but also to the performance and the credibility of the founders.
So the reason of a fixed amount, it's simplicity. You can then there's no discussion around it. Everything is very clear, transparent. So there's a
So the
question
next one is,
earlier which
yeah.
spoke
Can we bring
about.
up
I
the
remember
previous
the
question?
question.
Okay.
It spoke about how would you fund a founder? There it is, who's competing with existing unicorn. Of course, actually, there's no
Yeah.
problem. I mean, there's space for everyone. There are challenger brands, there are new brands, there are brands which are doing the same thing in a more efficient way, different business model, different GTM. Bring it on. We are ready to fund it.
Next question. What is the scope you see startups developing their own large language models or building products on enhancing existing ones like ChatGPT or Gemini? Oh, so this is a question for Vatsal. But I think with staying with Vatsal, I think we've become equipped enough to answer these technical questions also. But I'll take a go at it, and then Ninad can add. I think there are a lot of these businesses which are evolving, which can certainly leverage and reach out to achieving a product market fit with um, with the uses of Chat GPT and Gemini. But I think it needs to be done in a moderation, right? It will all boil down to a moat, because I come back to the five evaluation criteria at 100x. Founders' background, complementary skill sets, the market opportunity, business model, and moat. Right, and largely this piece will come under moat. And will your moat increase or decrease or stay the same over the next 2 3 years post our funding is very critical, right? Because that will ensure or entail the follow-on investor to come in and invest. So um, uh, I think this needs to be factored in terms of how your product journey shapes up. But I wouldn't say go all out in leveraging ChatGPT and Gemini. You need to develop a moat, but not over to you.
No, agree. It's not about how you develop these products, whether you use existing, Chat GPT and Gemini. What is the end purpose and what is the market you're looking at, and is a large market? That is important.
The next question is also how to develop a moat. I don't have an IP or patent. We are a SaaS company formed by college students. How do you evaluate a moat? We are highly passionate, so want to learn. And I'll bring up a D2C example over here, which Nath can add to also, and a SaaS also. So in D2C, a lot of people ask that, you talk about moat. Why did you end up investing in a company called Kerala Banana Chips, right? And the game over there, and Ninad works very closely with the founder, and the game over there, the moat over there was execution, right? And standardization of this 50-year-old or 100-year-old chips, right? So that I think was the moat over there. And similarly, if you put this process in a SaaS business, which inherently doesn't have an IP yet, but if you're able to crack a moat or a problem in a large enterprise, or a B2C SaaS model, which all of us have now gotten used to, I don't think you require an IP to begin with. If you have your product being consumed or used, I think that very much qualifies for you applying to funds at least like us. But Ninad, your thoughts on this?
So moat is not just an IP or a patent. Yeah. Moat could be a unique business model. Moat could be a unique pricing model. Uh, you know, uh, Google started the moat of pricing based on search. That is a very interesting model. Moat could be your execution. So moat can be in various forms. Various forms.
Okay, so I think this is the second last question. We'll take one more question and then we'll bring this session to an end. We've got a question. Any opportunity for funding support from VC for export import omni-channel marketplace? Why not? I mean, um, you know, we evaluated a bunch of businesses. As I mentioned earlier, vertical, horizontal marketplaces. We've gone ahead and invested in marketplace models, and logistics and exports export import has always been an interesting space. As long as it's not a quote unquote trading platform, which inherently doesn't have a moat, I don't see any reason why we should not explore this segment.
Sure. Submit a pitch deck. Remember, it should be a scalable model, which a moonshot idea.
Okay, we'll take the last question, and it's by Shreyas Deshmukh. Does the founder's past work experience affect the credibility of their ability to execute or run the business in any way? You know, 160 companies, and I would say it's fair to say 40 to 45% of our founders come with work experience between the age with the years of experience between 2 years to 10 years, and there's 10% to 15% ranging in the segment of uh, you know, 10 years to 15 years. And then there's a significant bunch who come with, 0 to 2 years of experience, right? So uh, it really boils down to what problem you've discovered and how big is the problem. As Ninad said, how scalable is the opportunity in your mind? And that's the reason why seed capital from 100x is being provided, so that we're able to kind of ensure you don't make those mistakes, uh, uh, which we've seen founders making. That's one of the core objectives. And if you have work experience, I think that really goes on to prove that if you're building in a space and if you come from a product development background, or your ability to build product and roll them out, I think definitely works in your favor. Execution, I think at early stage is very, very important. And I think as investors, we try and identify your ability to execute on a day-to-day basis. Ninad, your thoughts, since this
Past,
is the last question.
past experience is an advantage and can be a disadvantage. It's an advantage because you have knowledge of the industry and you can leverage on it. It's a disadvantage if you are unable to think beyond what you have done. We are looking for moonshot ideas. If you are just wanting to do the same thing in an incremental manner, it's not a moonshot, not a scalable idea, because that's the way you have been. It won't work. Startup is very different from a normal business. A normal business is happy with average growth rate, month on month, 5%, 2% annual growth rate. You're making money. Startup is not that. We require disruptive growth, massive early stage growth. And that happens only when your mindset is such which is looking for scalable growth. Sometimes, it's not a rule, sometimes a past experience can hamper this mindset. So I
Great.
think let's wind up, Shashank. I think you can put the closing comments, but let me speak for one odd minute, and after that, Shashank, you want to close. So founders, this is a great opportunity with people like 100x willing to fund you very early, handhold you, ensure that you're successful in your business. We will work with you to figure out what's the right business model, how can you build a scalable business, amazing startup. That's the real value you get for you very early. uh, it's a great time to be a startup founder. We are here to give checks of 1.25 crores to select founders. So if you are passionate about something, if you have a great idea and you think it's a scalable business idea, don't just stop here. Don't wait. Just go ahead and apply. Over to you, Shashank, for your closing comments.
Thank you, Ninad, for that. And thank you all for taking out the time today. And as we mentioned, our applications are closing on August 20th. We are very, very sector agnostic. We have been evaluating companies across consumer tech, enterprise tech, deep tech, uh, and others. Feel free to apply. Our response time is less than 48 hours, and within 7 days, you'll be sitting in front of us or virtually having a conversation with us to take a deeper dive. So, our response time is very fast. So, rest assured that if you apply on August 19th, you'll receive a response before the end of the month. Great. So, thank you again once for taking out the time, and thanks, Nal. See you guys later.
Thank you. Thank you for joining. Bye.